So welcome everyone to this new segment here on Ore Day. I want to welcome Bill Powers of Mining Stock Education. And for those of you who don't know Bill, I recommend immediately after this interview, you go check out his website. And it's miningstockeducation.com. And I have been a fan of Bill for quite some time. And the reason why I invited him here today is because he's done a fantastic job in educating the retail investors, and I'm sure some institutional people as well. But he hosts people like myself and my contemporaries who are looking to get distribution and eyeballs on their particular story. But he also invites a whole host of people who are experts on the space, whether they're geologists, stockbrokers, fund managers, entrepreneurs, etc. I wanted to introduce Bill, and I think he's got a lot to tell you, in particular because I think for new people to this sector, there's an absolute treasure trove. There's a wealth of information available online, whether that's YouTube, podcasts, or just reading in general. So anyways, let's get started and welcome Bill to Ore Day.
Thank you, Stephen. Looking forward to it.
So tell me, what was it about the juniors that first got you interested? You've been doing this for 5 years, if I'm mistaken, but what got you interested and what got you hooked?
So after the Lehman Brothers collapse, I gravitated toward precious metals with the belief that the dollar could lose its value any day. Of course, that was 12, 13 years ago now, and the US dollar is still around, but nonetheless, that pushed me into the hard money camp. And for a while there, I was in the, if you don't own it in your hands, you don't actually own it. So more of the physical precious metals. So all of my savings, I would put in the physical precious metals, and I was buying silver in the $20 range. And then if you recall, by the end of 2015, silver had gone down under $14, and it was kind of that point in December of 15 when I said, you know, silver is due for a pop. Yes, I have physical precious metals, so I'm protected in that regard, but what would be some leverage ways where I could profit off of silver's expected rise? So that gravitated and led me into the mining stocks. So January 21st in 2016, I bought a number of silver junior mining stocks that I researched. The bottom, maybe you recall, was the 19th. So I bought in 2 days after the absolute capitulation bottom. So for the next 6 months, I thought I was a genius, and my account went up tenfold in some of those little juniors. And I got hooked.
So it's 10 baggers are like crack cocaine, they say. Once you get a taste, you can't give it up. So yeah, I guess juniors are all about leverage, really, to exposure in precious metals. That's how I view it. But how do you spot the opportunity? And you've talked about in your podcasts about the arbitrage in knowledge, and I think that's something that Rick Rule, is somebody who's had on your podcast before, talks about. So explain to us what you mean by the arbitrage opportunity.
Well, I'll give an example. So you called me in February and were introducing this story, Mustango River Resources, to me. And at that time, I think the shares had moved from a penny to 4 or 5 cents or whatever it was. And you laid out the vision for Mustango Resources and said, you know, the market doesn't fully realize what we have here. So there's an arbitrage between the market recognizing the knowledge that the market at large has and the value that you possess. So I said to myself at that time, I said, I should just buy a position here just based on the convincing nature of what you laid out for me relative to your market cap. Well, I was doing some other private placements at the time, so I ended up not buying your stock. And then I met you a month later at PDAC, and you said, oh yeah, Eric Sprott just invested. And I just said to myself, oh, there goes that opportunity. And then your stocks got recommended, and I think it was up in the mid 30-cent range or somewhere like that. And that all occurred within 3 or 4 months. So I could have bought your stock at 4 or 5 cents and, you know, seen an 8-bagger in about 3-4 months. And I had that information. You initially brought me that information. Then I could see the value. So that information came through a person that I've connected to through the sector. And that's one of the key avenues of information for a successful speculator that you want. You want network and information flow through that. And if I would have taken advantage of it and pulled the trigger, I could have seen a nice 8-fold gain just in one of your stocks, Stephen.
Well, that's interesting, and thank you for the plug. And certainly, I do remember that. And when we did do Mustango, when we were looking to finance Mustango, I think it was just over a year ago. It was a 2 or 3 cent stock, and nobody wanted in. But then I think Mr. Sprott came in, and then the rest was history. And so, that also speaks to not just the arbitrage opportunity, about knowledge. And you're 100% right. It's about getting exposure, and I think that's what you do very well, is you provide good quality teams with good quality projects, distribution, eyeballs. You have a very deep following. But I think it also speaks to the cyclicality. All right. So when Mustango was also an unknown entity, it was also it was the dog days of the market, and it was very tough to gain any traction, unlike right now. So speak to us, or educate our viewers about how you play cyclicality. What are your views on that? Where are we in the cycle, et cetera?
So I'm not a macroeconomic economic economist, but what I think I'm good at is kind of compiling information or compiling viewpoints of experts. Obviously, I get to talk to some through my podcast that I interview, but I also consume content on the internet and through podcasts. And I kind of, whether I do it in writing or whether I do it in my head, I kind of come up with a composite view of where we might be in the cycle. And so where I think we are now, I think we're looking at a bull market for gold and silver precious metals. So we're in an upcycle, and as far as I can see, at least for the next year or so, minimally, that's a great place to be. So how does that affect my investing? I get a little more risky. Let's just say I go down, I invest in more of the exploration stocks, because a rising tide lifts all boats. So I know that even if the exploration stocks that I invest in don't hit, that they're not going to fall in the same way they would in a bear market. So I might lose 30%, but I probably won't lose 80% like I would in a bear market in the down cycle if the company came back with dusters. So I've been doing a lot of private placements with exploration companies, accumulating warrants for the leverage on the upside. And if I wasn't so confident in the gold and silver price, I wouldn't be investing in so many early stage explorers right now.
So gold and silver, you talk about gold and silver. Is that your primary objective, to get exposure to those metals? How do you feel about copper, uranium, nickel? How far outside of gold and silver do you go?
I also own uranium companies and copper. So besides gold and silver, uranium and copper I'm in right now.
Certainly. Well, I'm a big believer in those as well, as you know that. So tell me about your process. I mean, trust is such an important part of this industry, and it's actually something that our industry suffers with. So how do you identify the teams? How do you identify the right companies? What is your investment process?
So, as you know, past behavior is the best predictor of future behavior. So, past success is the best predictor of future success. And so, in terms of assessing the trustworthiness of a management team, with with the internet nowadays, you can just type in that person's name, learn some companies that they were associated with in the past, type in their name and that company's, and you can see what comes up. Now, everything that comes up, there's slander on the internet. I don't just swallow everything whole, but you can see what people have said about that person. And then, because I do have a network now, I'll send off a few emails or make a few phone calls and ask about that individual. And then I'll also call that individual and do my own assessment, just with the discernment that I've obtained or have, and just get a sense of what this person is in it for. And do I think that they're in it for the right reasons? Are they looking to make money at my expense, or are they looking to make money by making me money? And that's part of my process. And I've had people in the last year, executives, email me out of the blue and ask for a call and ask me to invest in their company or be featured in the show, things like this. And some people from Australia reached out to me, and I had no idea who they were. I emailed 5 people in my network if they knew who they were. Only one person came back and knew one of their board members. And I politely told them, I'm not interested, because I had no way of vetting these people, and nobody I knew them. So in that case, it's just avoid. And they could be great. They could produce something for their shareholders, but that's just not something at this point that I'd want to go forward with.
So what I'm hearing is people leadership is probably paramount for you. Is that fair to say?
Leadership is everything. As Rick Rule says, on the early stage explorers in particular, the greatest asset is what's between the two ears of the management.
Well, yeah, no, it's hard to argue with Rick. He's seen it all. He knows his stuff. And look, I agree. I think it's all about the people. Exploration business is risky, but if you can fail fast and reinvent yourself or pivot, not yourself, but just pivot, I think that's critical. And one of the things, speaking of leadership, I was listening to your podcast and you said something interesting about how you look for people who aren't totally motivated by money. Now, we're all after the almighty dollar in one way or the other, but you said something about fame, notoriety, reputation. Tell the viewers what you meant by that.
So when I'm talking to an executive let's say a younger executive, and by younger, I mean under 50, I'm assessing whether they're aligned with the shareholders. Obviously, I don't want them to have a bunch of cheap shares. I like it when maybe they launched the company and they've had some not success and the share prices come down. So I can buy my shares less than what they bought their shares at, where there's that shareholder alignment. But so that they're motivated to make the shares run, and they're not going to get paid unless they make me money. So I like that. But I'm also assessing, what are they in it for? Obviously, they want to make money. Why would you do this if you didn't want to make money? But what do they care about in terms of their reputation and their concern about whether they're perceived as an honest, hardworking person that makes other people's money? And what's the legacy that they want to leave in this sector? And I can kind of pick up on that by talking to some executives. And I've put my money behind several of their companies just because I said, you know what, they might not be successful, but I know they're not trying to take advantage of me. And I know that they view this as their reputation on the line, the end of the day reputation when they're 75, 80 years old, if they live that long and they're looking back on their life. What do they want people in the sector to say about them? And that strong entrepreneurial zeal and motivation, I think, is crucial for when things don't go right. Because in early stage exploration and in the mining sector, where Murphy's Law works overtime, things always go wrong, things fall apart. But what is that leader going to do? Is he going to hold his team together? Is he going to find a way and find the right investors to reinvest when things didn't go as planned? And I look for that entrepreneurial zeal, and I look for that person that wants to just move this forward. And, we all have an ego. I don't want an egomaniac. That's not what I'm talking about here, but someone with that level of ambition and coupled with the right team, the right project, and being trustworthy.
Well, look, I couldn't agree with you more. And it does come back to trust and gaining confidence in that individual. And it is more about money. It's about reputation. Anybody who's going to be successful is going to have the opportunity to do it again. And as I think if you are successful, it increases your odds of doing it again next time and be able to attract that capital, hopefully at a premium. So you've had a number of interesting guests. Would you be willing to share some of your favorites? I mean, who do you love speaking to? Is it Ross? Is it Rick? I mean, who are the guys that get you excited to hear from?
So I've had hundreds of guests, so I can't nail it down and say this person, because that would be like an insult to all my guests. And I appreciate I appreciate all their time. But I would say that what I've enjoyed is talking to people like yourself and others in the industry, where we record for 25 minutes. And then so often they give me another 25 minutes of their time, and they're just chatting with me, this retail investor that just came at them out of the blue and asked for an interview. And they're giving me another half hour of their time, letting me ask questions, maybe giving advice. A lot of these men are worth hundreds of millions of dollars, if not billions of dollars. And so on a personal level, that's one of the things that I've enjoyed most with the podcast. But what I've enjoyed most in providing for my audience is and it's often not the big marquee name, but it's just the average common man that's been successful or has something to share at mining stock investing that my audience has really responded to, because they see in that person, wow, he's just an average person like me. He put in the time and effort. He's done well, and he's on the pathway to wealth via mining stocks because of it. And I've done several of those interviews, and those are some of my favorite, because the audience can really resonate with it. They see themselves in that person, and it gives them hope that they could be successful.
Okay, that's fair. Very diplomatic answer. I certainly have my favorites, but I respect your decision. Talk to us a bit. Of course, you're from the United States, just across the border in Detroit or in and around Detroit. Talk to us about some of the nuances and differences between U.S. investors and Canadian. I know Americans often complain about the legend issue, et cetera. So talk to us about some of the pitfalls of being an American investing in the Canadian markets.
If you're retail only, you buy in the OTC, and it's even more illiquid than the Toronto Venture Exchange is for some of these smaller companies. So that can be quite frustrating to have a super illiquid market. There's opportunity there. Back to your question about arbitrage, if you can accumulate before the market recognizes, you could do well. But if you're in a stock and it's not liquid on the venture exchange, it's even less liquid on the OTC. So there's a disadvantage there. When you're a new U.S. investor wanting to go into mining stocks, your learning curve is quite great, because I have a lot of friends that have come from Canada that didn't work in the mining sector, but they were already in tune with and had the basic understandings of the mining sector and how the markets in Canada worked. For a retail U.S. investor, you have a learning curve. When are the Canadian markets closed? When the US markets are open? Make sure you don't buy on the OTC on the day the Canadian markets are closed, because the arbitrage is, you just overpay for any stocks. Like, just things like this you don't even think of. But when it comes to the accredited investor status and investing in Canadian juniors, it's quite frustrating, because, as you mentioned, the SEC puts this requirement, this legend on there, to where we cannot sell at 4 months and 1 day the way everybody else in the world can who invests in Canadian junior mining stocks. We have to go through a legal process to get the legend removed. And because of COVID and people working from home, this year it's taken 7 months from when I buy in a private placement to where I can get the legend removed. So that's a great frustration. It puts me at a disadvantage. And if there was a market crash or liquidity crunch, I'm stuck with illiquid stock that everybody else is selling, that I have no ability to liquidate if I wanted.
Yeah, that's a major disadvantage. I can't lie to you, and I've had that complaint come from a lot of American investors, and I really wish that the regulators would get together and solve that problem. You'd think that would be simple, but anyways, those are problems not for us. And my last question to you before we part would be about, what's your preference? You talked about buying on the OTC. Maybe you have an account that allows you to trade on the venture as well, or the private placements. Talk to me about the pros and cons from your perspective in buying in private placements directly from me, or trading the account on your brokerage account.
So I know I've had guests on the show like Joe Mazumdar and others that say, Bill, I don't want a warrant when I do a private placement. And I've even clarified with them, I'm like, so you don't want to go through, you don't want a warrant with a private placement? He's like, no, because that lets me know that the asset is good enough and that the investor base is good enough. And those that invest are not just going to sell after 4 months, because there is no warrant to strip. And I totally get where he's coming from. With my perspective, with the hassle of currency exchange, filling out all the paperwork, being as illiquid for this year, 7 months after I buy the stock, it's not worth it for me unless there's no opportunity to buy in the open market. The private placement would have to be so severely discounted to the trading price to incentivize me to do that, or they would have to give me a warrant. And that is where I buy. I try to accumulate warrants in companies that I think have good potential for a rising share price. Other than that, I'm gonna buy on the OTC, or I have an interactive brokers account. I can buy on the TSXV if I want, but then I have the ability to buy and sell whenever I want. And I advise a couple high net worth friends, and there was a recent placement in Canada of a company that I recommended to him, and he's like, okay, I could buy it at 12% less than what it's trading in the open market. And then we went through the pros and cons, and he's like, it's not even worth it to save 12% to go through the hassle with the Canadian markets and the legend. He said, I'm just going to pay 12% more and buy it in the open market. And I 100% agree with that perspective.
So do I, especially when a junior stock can trade up and down 12.5% in a day. So it's it's almost irrelevant. I'm with you. I want that warrant as an investor personally. I think that's where you can really get sweeteners. So anyways, as we wrap up, any parting thoughts for particularly for new investors coming into the space? Because I think there's going to be a lot of new people interested with the returns being available. That attracts new eyeballs. So what do you say to the greenhorn coming into the space?
The first thing you need to know is what's stacked against you. You need to know how the game is stacked against you. And this is over years I've learned, and I don't know everything. I don't know all the tricks and how the game is rigged against me. But if you're gonna, go into the casino, you want to at least be aware that the odds are stacked against you. And then you want to know how you can do the best to where you put yourself in a position that the probability would be in your favor. And so you want to really research. If you go to my YouTube channel, I have a playlist called New Investors Start Here, something like that. And you can go and you can listen to me interview Warren Irwin about mining stock scams, about how management can take advantage of unsuspecting investors. You'll also find some inspiration about how you can succeed if you're willing to put in the work, but it'll bring to light a lot of things that you're not going to be aware of if you just say, oh, I can make a lot of money in mining stocks. You also got to be aware of how some of the sharks play the game.
I think that's those are great parting comments. So my takeaways there are trust, leadership, and education, I suppose. And I guess for all anybody interested in the junior mining space, please do go check out Bill Powers' website at miningstockeducation.com. And Bill, thank you so much for joining us in this reverse interview here on Ore Day. Pleasure.
Thank you, Stephen. Thank you.